Hello, Owen here, and today we're going to continue looking at emergency taxation, which applies to the Irish situation only. Now, you should have first looked at Emergency Tax Ireland, that video. Now we'll continue on, and we're going to look at the workings for 10 weeks. And the scenario is that Eamon Talon commenced employment, and he has not got a tax certificate. He earns €800 a week, and we're going to see how that is dealt with. Now we will look at the emergency tax deduction card, which is more simplified than the normal tax deduction card. Now I've pre-filled it out a little bit, and what we're saying is that because he has his PPS number, is that the first 8 weeks his standard rate cut-off is 631. After that it goes to zero, meaning that he will pay all his income at the higher rate. Now for the first 4 weeks he will have €32 tax credit, and after that it will go to zero. Now to keep it simple, we're saying that Eamon is earning €800 a week. Now in week number 1 the standard rate cut-off is 631. So he earns in excess of that. So in other words, he'll have 631 at 20% of the standard rate, and that will work out at 126.2. Now the balance, which is 169, if you take that from that, you get 169, and that will now be at 41%, and that equals 69.29. So if we add the two of those together, that's his gross tax 195.49, but to be less his €32 tax credit. So that'll give us 163.49, which is the amount that is due. Now his USC, all his income, the €800, will be at 70% or 7%. It is not 2% and 4%. Now the PRSI is calculated as normal, so we won't unduly worried about that, and the same with the employers. That is, we can't see that there at the moment. Now his net pay is going to be his €800 less what he pays in tax there, less what he pays in tax. We said, just make that a red to make it a bit, less his USC, less the employee's portion of the PRSI, and that will give the balance there. So that's 553.9. Again, you can check that out. Now weeks 2 to 4 are treated in an identical fashion. Again, is that 631 for the standard rate cut-off, so he earns more than that, so it'll be 631 at 20%, given 126.2. The higher rate will be what he earns, 800 less 631, which is €169 at 41%, and adding the two of those together we get 195.49 less €32, given 163.49. USC is going to be at 7%. All of his income is going to be at 7%, and PRS, the employee side of the PRSI, is going to be as normal. So again, his take-home pay or net pay is going to be his gross pay less tax deductions, less USC, less PRSI for the week, giving him 553. Now it should be pointed out that when an employee is on emergency tax, that these are not cumulative, they only apply for the week. Now we see week number 5, there's a little difference here. Again, standard rate cut-off is 631, again given 126.2 in tax at the standard rate, and again given 69.29 tax at the 41% or higher rate, and the gross tax there is 195.49. However, you will see here he doesn't have any tax credit, so his deductions in week number 5 is the full amount in 195.49. Again, his USC is going to be the same, and his employee PRSI is going to be the same, and we'll just put that in for the employer, and his net or take home pay is going to be again his gross pay less what he paid in tax, 195, less what he paid in USC, less what he paid in the PRSI, giving him 521.59. Notice, less than he had the previous week. Now weeks 6 to 8 are treated identical as week number 5, in the sense is that he still has the standard rate cut-off of €631. Again, he'll pay that at 20%, 126, the balance at 41%, given that gross tax. He doesn't have any tax credit, so there'd be full of that is equal to that. Standard, or his USC is at 7%, or €56. His employee PRSI is the same, giving him net take-home pay of 521.59. By week number 9, if poor Eamon doesn't have his tax sorted out, things are getting tough on him from week 9 onwards. Still earning 800, but you'll notice now that he doesn't have any standard. The standard rate cut-off is at 0. What does this mean? It will mean that he'll pay all his tax at the high rate, or the 41% rate. So that's 300, which is fairly high, 328, given his gross tax will of course be the same, 328, and how much he has no tax credit as well, so that total amount is going to be deducted. He will also have to pay his USC at 56, which is at 7%. He will also have to pay his PRSI contribution, which is 26.92, and we'll just include the employers one there as well, and that will give him a net take home pay of 389.08. So starting off with 800, and he only takes home 389.08. That is certainly an incentive to get his tax sorted out. Now week 10 and subsequent weeks are going to be equally as bad for poor Eamon unless he gets his tax sorted out. Pays all his tax at 41%. He has no tax credit, so in other words 328 he'll pay in tax, plus his €56 USC, plus his 26.92 PRSI, so giving him the same take home pay. Now we are told that the Revenue Commissioners issued a cumulative certificate of tax credits and standard rate cut-off between weeks 10 and 11. So he'll be taxed on the emergency tax up to week 10, we said, and now we have to transfer from emergency tax to cumulative tax on week 11. Right, so we know after week 10 he is no longer on emergency tax, and we're going to transfer the emergency tax card to the cumulative tax system. Now what we have to do is, if you like, we draw a line under week 10 and we sum up his pay over the 10 weeks, or however many weeks would be involved. We sum up the tax deducted over the period that he was on emergency tax, USC period he was on emergency tax, his PRSI employee when he was on emergency tax, plus total PRSI deducted. So these values are going to be transferred to the normal tax deduction card, those values there. So, and that will be in a follow-up video called Transfer from Emergency Tax. So we'll see you there. Cheers.